I don't see any kind of like overbuild outs or any gluts in the market for the next 2 to 3 years, because every single company is kind of like moving that way because they need to upgrade to stay competitive.
GM, good morning. Welcome to the Milk Road AI Show, the AI podcast that preps you for the AI revolution while your smart speaker still can't understand your name. I'm your host, Kyle Reedhead, joined by my co-hosts, Duncan and Patrick. Today, we're going to discuss our general thesis for AI and our investable themes of kind of the AI stack so that you guys get the foundational framework of how to think about investing in AI. We're also going to dive into a few big news stories like Michael Burry. He's being short AI, and I think he just shut down his entire shop like yesterday or 2 days ago, as well as potentially getting into Kimi K2, something going on over in China that may impact our investment thesis. So we're going to dive into all the important things going on in AI. But before we get started, obviously this is a brand new show, and we need your guys' support. If you're watching this on YouTube, we need you to subscribe to the channel. I think we've got about 500 or so subscribers today. We've only had one episode out, which by the way was awesome. Duncan and Mike Novogratz, that was a killer episode. Go check that one out after this if you haven't. But help us grow this show. This is going to be the best AI investing show in the world. I guarantee it. So subscribe. Drop a comment, give us feedback throughout the episode, and make sure you hit that like button. We need to get this thing in the algorithms so that we're growing. If you're listening on iTunes or Spotify, you can follow or subscribe there as well, and give us a rating once you've listened to the show. I think you can also drop a comment in Spotify these days, so do that too. Why not? That helps. And again, we want to hear from you guys. As you listen to this episode, please give us feedback so we can make it better. Let us know what kind of guests you want on this show, because we're going to be interviewing once per week as well. So please just be open and comment and help us make this show the best that it can possibly be. All right, gentlemen, let's get into this. Let's start very simple. So for the listeners, Duncan and Patrick are the smart brains for this podcast, and they're always going to be the smart brains. I'm going to be the dumb brain. So I'm going to be the guy that asks questions and tries to dumb things down when it gets too complicated, because these guys really, really understand this stuff. And so I want to just lay the frame or the foundation for everyone, for all of our listeners today, because a lot of our listeners come from the crypto world, come from our macro world with our 2 podcasts there. This is kind of our first big interview around AI with you guys. And so I want to set the stage in terms of when we think about investing in AI, what is the general thesis for AI? So I want to throw it over to maybe both of you guys, but I don't know, Duncan, if you want to start us off. Help us just understand why AI is such a big investment opportunity. And then I want to get into the different layers of how we think about investing in AI. So kind of like, what's the stack in terms of, as AI grows and as it gets bigger and more important, where can we actually allocate capital? But let's just start with why AI first.
Yeah, so I think like everyone has used AI at some point, and everyone's felt a pretty direct impact on their own life, especially myself as like an investor. I'm like researching a lot of different companies or new sectors, and what would have taken me, hours or days, maybe even weeks, can be down to like a few minutes or like a few hours just using these tools. And then, ton of automation workflow for companies. And like the real signal here is that, the biggest companies in the US are essentially betting their entire future on AI. So it's like the smartest, wealthiest people in America and the largest corporations are betting their future on AI. So that has to really turn some heads. Like just between Microsoft, Amazon, Meta, and Google, I think they're spending like $350 billion this year in CapEx on AI. So that's like buying chips, data centers, like investment into AI. And like they expect to kind of ramp that up to like 500 billion by 2030. And by 2030, like the global spend on AI projected by UBS is supposed to be 1.3 trillion. So it's like an immense amount of money per year is getting spent. Basically, the smartest people in the world are putting all their chips in on AI. So that creates like an interesting investment opportunity, because it's kind of hard to front run that amount of capital, right? It's like hundreds of billions of dollars. So like when they say the markets are efficient, it's like, yes, but how do you front run like, trillions of dollars of spending in a sector? Right. So if you can kind of have the foresight to look out a few years ahead and do believe in these technologies, and they actually do create value for the end users, then, you can kind of position yourself in some of these themes like relatively early. So, when ChatGPT came out, you had the chance to get like a liquid 10x on Nvidia over the
Hmm.
past 3 years. I don't know if it's quite 10x or maybe more, but and now there's kind of like these next stages of AI where we're still like pretty early in the whole AI revolution. Like the uptake of AI into companies is pretty new. And then also something I'm super excited about is AI robotics. Like that's just very, very new. And I think that's going to be like, potentially the biggest sector in the world, just putting AI in physical form.
Right. That's kind of the next phase of AI. And it's funny, you say it's still early for AI, yet you have a bunch of people on Twitter saying we're in an AI bubble and we're going to hit the top. So we'll talk about that later in the show. Patrick, I want to throw it over to you. Anything you want to add just in terms of the thesis for AI before we get into more details?
Yeah, there's absolutely no doubt that this stuff works. I think in 2022 when ChatGPT came out, people, asked a couple questions. I remember I was in school at the time. One of my professors sent out an email saying, "You might have seen this new thing, ChatGPT. It's pretty good." And he sent a screenshot of him asking, "The cat tried to cross the road, but it was too wide. What is wide?" And ChatGPT responded and said, "The street is too wide." And this was like mind blowing. We've gone from those like token cute examples to real work getting done. Like software engineering has been completely transformed. Legal, medicine, like all of these big domains are starting to get hit. So I think like as much as people like to say that we're in like the late stage of a bubble, businesses are still at like the very beginning of running pilots on, integrating these systems in their workflows. So there's a lot to come.
Yeah, and this is a good opportunity because like Patrick, I've known Patrick for a long time. He's always kind of been like whiz kid coder, and I've asked him like how much has like AI actually sped up the work you do, and so I'd be curious to like hear your answer from that, like what it was pre AI versus now, and how efficient the coding is.
Yeah, I mean, like the job is transformed entirely. You spend a lot more time directing agents that are actually doing the manual like writing of the code. You can iterate a lot faster. Not everything works, but the systems get more reliable every time a new one comes out. My entire team, all the people that I work with, everyone's very AI forward. So we're all like operating like cyborgs at this point. I think programming is probably the best place to look for like where's the future going to be for work, partially because the models have gotten so good early at programming, but also because engineers are more likely to be on the cutting edge and to like drastically change their workflow early. So I know people who like run 10 coding agents in parallel and are just managing this swarm of machines. So it works.
So how much faster would you say you are with AI now versus pre AI at like
Definitely twice as fast. And I'm twice as fast at making mistakes and also doing the right thing. So like both sides there work, and like making mistakes with AI is also important. You figure out how to use it better next time, what are the limitations of the current models, and you can like get rid of some bad ideas quickly.
Only twice? I thought you were gonna say more than twice. Twice doesn't.
Well, there's a rate limit on how fast my human brain can process what it's giving me. Like I can only read so fast.
Yeah.
It's starting to feel now like I'm the limit and not the machine.
Okay, well, that's interesting.
That's what Elon always says, is that our thumbs are actually our limit, right? Because it's how fast we can type into a phone. Once you have Neuralink connected, then that removes the slowest part of the friction.
I've recently started just dictating into my coding agent,
right?
Because I can speak a lot faster than type, and then just let it rip.
Yeah, even a business case, like from our perspective, like with Milk Road, we used to have just one podcast, right? The Milk Road Crypto Podcast. We now have 3: Milk Road Macro, Milk Road AI. Previous to AI, we would have had to hire multiple people to manage the podcast, to edit them, to upload them, to write the descriptions and the titles and make the thumbnails, et cetera, et cetera. We have one guy that does this who used to be maxed out on one podcast. Now he's doing 3 podcasts. He's still maxed out, but he can now do 3 podcasts. So 3 times the amount of work, and it's still just one guy, right? So that's saved us a lot of potential expenses in hiring because we don't need to do that anymore, right? This guy can just keep automating using AI. So that's just one small example. And then you go and you say, now every company in the world can do that and have their version of multiple podcasts with just one person. There's just so much demand still to come for companies from all sizes to integrate and use AI. It's not like a new technology where you got to go build some brand new product and there's a long learning curve and there's a lot of dev work into that and whatever. Like this is just, it's already there. It's at your fingertips. You just go use it and boom, those efficiencies are there. So like there's just so much still to come, I think, in the corporate world, which is just only going to improve earnings, right? Which is kind of what we're seeing right now. So, okay, I think most people understand that the AI, what we're doing with AI and what's happening here is massive. It's as big, if not bigger, than the internet. I think that's pretty clear, and it's going to touch every part of everything we do, both in work and in personal life. Most people are starting to wrap their heads around that, and then when it gets into the physical world in terms of robotics,
Yeah.
it's a whole. I don't know that everyone's wrapped their head on that, but like
People are not getting
that one's just even more wild. But most people, when they think of AI today, they think of these like chatbots, right? They think of ChatGPT or maybe Gemini or Grok, because we've used those. And when they think of where to invest in AI, they're kind of like, okay, well, Microsoft, maybe there's NVIDIA, obviously. And I feel like that's about as far as a lot of people go. Of course, there's others that are understanding the bigger picture. But what I want you guys to do is just like take me through the investable stack here, because it's not just about chatbots. There's a lot of things that go behind this. So peel the layers back one at a time, starting at the app layer, and then like what else does it take to power that app layer and power this and that and that. So give me kind of all the different layers that you think about when you would invest in AI.
Yeah, so I don't know if we're gonna go in the exact order you want, but I think just like the big companies that everyone thinks of, right? Of the AI revolution has been NVIDIA, so that's kind of like the chips and semiconductors. You have like NVIDIA, AMD, Intel. Google's in that a little bit with their TPUs. Those are kind of probably like more of the staples of AI that people would know.
Yeah.
And that's essentially they're creating the GPUs to run training for the AI, so to train new models, and also inference, which is like when you ask ChatGPT a question, it's gonna go think and answer for you. So that's like pretty core picks and shovels to this whole thesis. But those larger companies, will probably make good investments, but those are like kind of trillion dollar companies, so might be not as exciting for people who want to go a bit deeper. I know, Patrick, you talked to me a little bit about like some smaller ones, Grok.
Yeah, there's some smaller private players that are now taking a different approach. So you have like NVIDIA and Google focusing on like cutting edge frontier training chips, like Blackwell and stuff like that. But you also have this now growing demand for inference, which is like actually running the model, serving production use cases, letting people talk to it. There's some cool, interesting private companies like Cerebras and Grok who do specialized inference chips. So they're not quite GPUs. They have their own designs. They're built specifically to run transformers and LLMs. They're super fast. Cerebras can serve models at like 3,000 tokens per second, which is just blazing instant on your page. So you don't really have to wait for responses. Grok, similarly, like 500 TPS, 800 TPS, super fast. This is kind of like a growing domain for on the chip side. OpenAI a couple weeks ago announced their deal with Broadcom, so they're building specialized inference chips as well. Now we're going to start to see like a divide between chips being used for training, chips being used for inference. And there's been a bit of a debate that we'll get into later on like GPU depreciation, which this plays a huge part in.
Yeah, so I think that's kind of like the core thing that everyone thinks of is the chips, and then the next obvious one is these models. So the models, again, like OpenAI, $500 billion private company. I think Anthropic was like a couple $100 billion. Patrick, you said someone else who raised Cursor raised this morning, or
Cursor closed basically $30 billion, like raised at $30 billion this morning. And then there was news this morning that XAI raised another 15 billion, but then Elon replied to CNBC and said this is false. So not sure what's going on.
So this is a interesting, the models, and Patrick, I'd be curious to get your take here. I've always thought that the models are in these like private companies are not super attractive to invest in, because you're essentially spending a lot of money training on the latest frontier model, and then someone is coming out like a few months later and then like coming out with something better, and you're just essentially burning a ton of money training on each new model. And my worry would be is kind of like where is the finish line there if you constantly have to like make this massive investment in training the next best thing, and then someone can just come out, and since it's in the digital world, I can switch, even though there's a fair amount of lock-in with like memory and stuff and familiarity on like ChatGPT. If Elon's Grok comes out and it's like way better, I can switch, and it's not like it's just switching a tab.
Yeah.
Versus, some of the other things we'll get into later, there's much higher friction and switching costs. So I've never thought that, unless you were like super early here, that, buying OpenAI at 500 billion or Anthropic at 200 billion is super attractive. Maybe I'm wrong, but it just seems like you can get less certainty there into the future because, someone could come out, or like we were seeing, like, a different country, like a lab in a different country makes a breakthrough and they come out and just devalues a ton of like your previous investment. So curious how you think about that on kind of the AI labs investability.
Yeah. I mean, you can see just from the release schedules that the labs are constantly leapfrogging each other. It seems like anytime a new lab drops a model, the other 4 labs drop something a week later, or they have something saved and they just launch it immediately. So like the model layer on the frontier is slowly becoming commoditized. On the consumer side, the switching costs are pretty low, right? Like memory is not super ingrained in the systems yet. There's a little bit of personalization, but truthfully, like not enough to make me be super loyal to one. On the programming side, I change model providers to whoever has the best programming model at the time. So you can like kind of go back and forth. There are some companies like Cursor, they just raised their big round, who they have some of their own models, but they also aggregate a lot of the other frontier models. So if you pay for Cursor, you can get access to basically whatever you want. So that's one side. I think on enterprise, the switching costs are a bit higher. No one's ever been fired for hiring IBM. So you just like, if you're a big corporation, you want to add some AI to your stack, you're probably going to use like OpenAI or Google, something, super well-known, reliable, that kind of covers the whole stack. But it's still like largely an open question. How far ahead can closed labs get ahead of open source? This week, Kimi K2 Chinese model came out, Kimi K2 thinking, and it's great. It's like at the top of some of the top like hardest leaderboards. And it's super cheap. It's 10 times cheaper than Anthropic's frontier models. So I'm sure that the labs have something up their sleeves. There's gonna be big launches before Christmas, 100%. But it's largely an open question on like, are these guys super far ahead? Is the gap too big to cross?
Yeah.
Do you think there's any value though in like the data storage basically? So like I use Grok mainly as like at least my personal one that I use. So it knows me so well. So when I go to it with additional questions, it has like a lot of context of other parts of my life. And so I actually don't use ChatGPT because of that, right? Like I think in terms of the output I can get from either, it's pretty similar at this point, but I keep going back to Grok because it just has so much context about me. So is there any stickiness to this, do you think? Or do you think that that's easily like I could port that over somehow?
Yeah, this is starting to happen. It's becoming more popular. I think OpenAI launched memory stuff like 8 or 12 months ago, and now it's being picked up by the other labs. We'll see how that impacts it. For me, it hasn't caused me to be too sticky. Grok is an interesting one because it also has context of your whole Twitter. So there is like maybe a bit of a moat there that the other labs can't really do.
Right.
I know everyone who uses Grok loves it for the Twitter integration and all of that data that it has. But we'll see. Like largely this sort of thing is use case dependent. If you are doing a specialized task like programming or law, you maybe don't care so much about like its personal knowledge of you. You are sensitive to little fluctuations in its performance on your task. So you care about getting the smartest model.
Right.
Kyle, once the AI girlfriends come out, then we're gonna get locked in.
Yeah. 100%. I'm going nowhere. Elon's already working on that, isn't he? Isn't that like his main focus? So we got chips, and then we've got AI labs. What else? In the rotation?
We have like basically the hyperscalers is kind of like a bit of a new like category. A lot of these big tech companies are doing it in house, but kind of two notable ones that have appeared are CoreWeave and I'm gonna butcher the name. Nibius, is that how you say it, Patrick? I'm not even 100% sure, but basically them, and then also like Oracle's been getting really big into this sector as well. So these like CoreWeave, I know the most about, and they essentially will go and talk to like an OpenAI. OpenAI is like, we want this much compute can you get it for us? CoreWeave will then go sign like a contract with them. So OpenAI says we'll pay you this amount over X amount of years. CoreWeave goes, takes that, buys like I think they take debt out against that contract essentially and buy GPUs from, let's say, NVIDIA. Then they go get those GPUs and they put them in a data center and they kind of coordinate them all, set them up, which is a very difficult task and extremely specialized. Then they turn them on, start giving, OpenAI their compute, they start getting paid. They pay down their debt with that cash flow, and then whatever is kind of left over from paying off the GPUs, they'll make as profit, as like a very basic way to think about it. And then this is kind of where this whole GPU depreciation stuff comes in, because if the GPUs have like a longer useful life, then that's kind of more profit for CoreWeave. But if they become irrelevant sooner, then that's less profit, or potentially even like they could go into the negative or something with them. I don't know the exact specifications around the contracts, but that's kind of the whole debate right now, is like how long is the useful life. But we can kind of talk about that more later. So those are like pretty.
That seems like a high risk business, a hyperscaler. It's like, because you're talking hundreds of billions of dollars, I'm assuming, to buy this many GPUs and then hope that, I mean, I guess you're getting the deal first, but still things can fall through, things can happen, right?
Yeah, so I think like the deals are pretty locked in, and I don't know I haven't gone in and actually read what those deals look like. I have a friend that maybe we could bring on the show who's actually gone and read the contracts and could
nice.
at a very pointed level about the actual risk they're undertaking. But that's kind of those people are kind of buying the GPUs, coordinating them, and providing that compute. So I think that to get comfortable in investing in that in like those sort of companies, you really need to do a lot of homework. I personally haven't made any investments there. I think it's kind of like more on the high risk side with like the AI labs and the hyperscalers, just because like you need to really understand how that stuff works. Whereas like, buying NVIDIA, they're just selling the chips to everyone. It's less stuff to kind of underwrite. The proof is kind of like shown already. So that's kind of the next section we had. And this is where like people are starting to get concerned around bubbly type stuff, is because these companies are taking out massive debt essentially to like buy the chips and buy the data centers. And if there's not like the demand for AI and like the cash flow kind of generated on the other side of this, like that's the big bet that these guys are taking, then you could have like a really poor payoff, or potentially like, default. Obviously, I think, like a company like Meta taking on, I forget how much they raised, like $20 billion or something, like they'll be fine. But kind of these more levered players, they're really kind of counting on the demand on the other end. And there's a lot of like kind of interconnection. So that's where people are getting a little bit more scared of the bubble side.
Because it feels like there's two versions of hyperscalers. There's the hyperscalers like your Amazon and Microsoft and Google, which they're doing this, but they have their own product. They own the whole stack basically, like Google does. But then you have the CoreWeaves and the Nibius or whatever they're called, where they don't have any of the users or the use cases or whatever. They're just trying to be almost like a middleman, which feels like, and they're taking out a lot of debt. So it feels like that's a whole different set of risks and complexities, I would say.
Yeah, I agree. So I've personally stayed away from that, but there's some smart people who are pretty bullish on them. I think it's just kind of a higher risk, higher reward play. Like if those companies, like if their thesis plays out, like they'll make a lot of money, but you probably have less downside protection. You've kind of seen that this week. CoreWeave essentially, their capacity that they wanted to bring online is coming online like a few quarters late, and their stock just got absolutely hammered. It's down like 16% in one day. And that's just like delays. Like the CEO was on TV and he basically said like the demand is insatiable, but like they were just like, they have to build these massive physical structures, which are like truly ginormous. Like the one context I have is one of the stocks that I like, Galaxy Digital. They have this data center, and its campus could be 3.5 gigawatts big, and like Manhattan, I think, is like uses 6.5 gigawatts. So it's like, the amount of power that these campuses are using are just ginormous. So the hyperscalers definitely feels a bit more risky, But if you want to do your homework there, could potentially provide like some good leverage in like an
Right.
upside case scenario.
And what's the next on your list? So we've got chips, we've got the AI labs, we've got the hyperscalers. Now we're on to
Yeah, so this is the data centers, and this is like one of the ways I've chosen to express the bet. So basically, the data centers, some people are trying to go like the fully integrated route, like Iron has like the data center, and then they're also buying the chips. That's kind of scary to me because of this whole chip issue that we talked about. But then, other people are just saying like this is a lot of the old Bitcoin miners who have these massive power contracts that are now needed to kind of fuel all these GPUs. And so a lot of them are converting from Bitcoin mining into AI data centers. And, a lot of them are just the landlords. So it's like, hey, we have this data center or we have this power and we'll build you this data center like to your specs. And then we'll sign a 15-year lease. And since this power is like the main constraint right now, people are getting just ridiculous offers for like 10-15 year leases because like if you think about that $350 billion capex number just this year alone, there's just so much money flying into this space that like if power is the constraint, it gets bid up like massively. And it's more inelastic because it takes a long time to come online with new power. So essentially all these Bitcoin miners got handed a winning lottery ticket, that they have all these large power contracts. So you have like, I think like the main ones are like Galaxy, TeraWulf, Cypher, Irene. There's some other ones, but those are kind of like the big people who've signed contracts. And I personally like Galaxy a lot. They have a contract with CoreWeave where CoreWeave's going to pay them like $20 billion over 15 years. So Galaxy, they just have to build it, make sure they don't fuck up building it. And then they sit back and collect the rent and cross their fingers CoreWeave doesn't go bankrupt. You essentially are lowered down like the stack of, if CoreWeave like really crushes it, they're going to capture all the upside. But, if they go bankrupt, then like CoreWeave goes, to zero. But like Galaxy's kind of like they owe Galaxy money first. So they have to pay Galaxy first. And then like the upside is CoreWeave. So if you kind of think of that on the leverage stack, I think the data center model is, I have to underwrite. I just have to make sure that I just have to get comfortable that CoreWeave's not going to go bankrupt. I don't have to get comfortable that they're going to be like wildly profitable because,
right.
These GPUs last longer or whatever it might be.
And just to give a good visual for people, there's the AI labs. This is your open AIs and your Anthropic and your whatever else. And then to power all that, you need all these GPUs, which is the chips that we're talking about. That's your NVIDIAs and your AMD and your Intels. And then those GPUs need to go somewhere, right? And they need to be powered with energy. So almost like your commodity layer, that's your data centers and energy, right? That's your Galaxies and all these Bitcoin miners. These are just massive, huge buildings in places across the US or China or wherever. And then they just need some sort of power, some sort of energy source to actually power these massive, huge buildings, which could be in the form of natural gas. The grid sort of, but the grid doesn't really work enough for it. So you have natural gas, you might have solar. There's a lot of talk of nuclear. So there's this whole world of like, these things are using a lot of energy. I think today it's around like 5% of the entire US's electricity needs is through data centers. Yeah, it could be more. And it's supposed to go to like 12 or 13% in the next like 2 or 3 years by 2028. So like we're talking massive buildings with a ridiculous amount of energy that's needed. So that's another very popular investable area in the AI side, which I think we'll be talking about a lot on this show as well. And then I guess there's like sort of one other layer, or you have it kind of broken into two different parts, which is like, I would call it like the app layer, which could be robotics. It could be, the digital app layer. Why don't you walk us through kind of those two, and then we'll maybe dive into one of these.
Yeah. So this is going to drive a lot of the demand where it actually because basically they're building out all this stuff in anticipation that like these models get better and people continue to use them more and, they get integrated into businesses. And I think like Jensen, he went on like Brad Gershman's podcast and he talked about, he's like, for the next 2 or 3 years, like, just replacing like the CPU compute with GPU compute and like switching that over to AI is like the next 2 to 3 years of demand. Like no problem. Every company is doing that. And then like beyond that is a little bit more of an open question where it's like, are these models good enough? Are there new kind of use cases for AI that emerge and get adopted that can actually support this immense amount of spending. And that's kind of the bet that everyone's making. So, one such use case and something I think is going to be like really, really exciting is AI, like in the physical world, in robots. So, we have these like LLMs that have gotten really good. And, more recently, there's these like vision language action models, which are like a new form of AI where the robot can like look at things and then actually have some sort of understanding of the world and then do tasks. So eventually there's going to be, robots just like doing work. And that is huge. So I think over the next decade, like you're going to start to see that in logistics facilities, warehouses, manufacturing lines, eventually in the home. The big companies here are mostly private, other than Tesla. And like Elon, what was really interesting, and like I think the robotics narrative is really going to pick up in the next year or two, assuming this isn't one huge bubble, but I don't think it is. But in the next year or two, I think it's going to pick up really hard. Elon Musk was on Joe Rogan like a few days ago, and he basically said, this is how he framed it. He's like, when I was at Doge, I realized like, the US is going bankrupt. There's nothing I can do about it. It's just like too hard to like unscrew this mess. So I'm going back to Tesla and I'm focusing all my time on Optimus because I think like AI and robotics are the only way that we're going to like grow our way out of this. And that is the future. And he kept on repeating AI and robotics, AI and robotics. So I think like a lot of people understand how big AI is. They're not piecing together how big robotics is. And I just listened to like a few minutes of this podcast. I need to finish it. It was with the founder of the Bot Company. And then I think it's Jack Altman, like Sam Altman's brother who runs the podcast. And I think there was like a point in time, in these AI labs where the LLMs were happening and everyone was like, holy shit, this is going to happen. And the rest of the world was just like totally asleep to it. And those guys, if they bought like NVIDIA or whatever, or are part of those labs and have equity in them, have, been made insanely wealthy. And I think that's like starting to happen in these robotics companies where it's like, holy shit, like we're going to get a general purpose robot in the next like, 5 years, or at least like have these robots be able to do useful work in the next like 2 or 3 years, and then general purpose thing that's like 5, 6, 7. And that is just, a complete restructuring of how we think about things. If you can have a robot doing manual labor, and I think it's just gonna be one of the biggest industries ever. And why I think it's investable relative to the models, or kind of some of the other parts of the stack, is that I think it's going to be very sticky, right? Like if I roll out 50,000 robots into the manufacturing lines of a massive company, they are like, to actually like pull that off and give them all the customer service and train the robots on their specific tasks and have the safety in place and build the trust there is going to be like a monumental undertaking that probably takes like multiple years. And then once those robots are in place and can do the tasks to the KPIs that these like factories run at, that's going to have extremely high switching costs. And the amount of money you're going to make, or the amount of money these companies are going to save using like a robot versus having to pay like human laborers is going to be a ton. And that kind of opens up a whole other question. I don't know if we want to talk about this week or the future. I have some optimistic takes on like, AI taking everyone's jobs, but I think that that's like a really interesting sector to be looking at, and people are really not paying attention to it.
Patrick, are you as bullish on the physical robotics side as well? Or do you think that that is something a little bit farther away?
Well, I'm definitely bullish on it in general. I think that general purpose robots maybe are going to be a little further away in terms of like something that can be as flexible as a human. But I don't think it matters. I think like the downside is pretty covered, because if you think about like a factory, there's only so many tasks that need to happen. And we know that the models can have human level performance in tasks that they're trained on. I think this like the same logic here applies for LLMs and agents in software and like on the internet. We're starting to see like the frontier labs, training the actual models. They kind of just like set their scope on a domain. They say like, okay, now we're going after software. Now we're going after law. Like a month and a half ago, Anthropic released like Claude for finance. Like these domains kind of just like come into their vision, and then they just optimize it. And you like, if it can't do a task, they train it specifically to do that task. So generalization becomes less important. They're simply just going to scale to all of this. You don't need something that has like human level flexibility. You just need to collect the data, train it. On the robotic side, there's a lot of really cool things happening simulation wise. So like collecting data to actually train the models. They train the models in simulations now. Like they can generate 3D fake worlds that mimic like exactly an Amazon factory or exactly a restaurant. And the model trains in the simulation, and then they port that over into a physical robot. So I think like this is happening. I don't know if that means you're going to have like a pseudo human in your living room that can do anything that you could ever need it to do. But I do think it means it's going to be able to do household tasks. It's going to be able to do, office tasks. It's going to be able to do factory tasks. In my mind, like that covers a lot of the downside. It becomes like the bubble conversation. You can maybe get a little bit insulated from that because we're still like only 1% into adoption on things that we know we can make it do.
Right.
So
Yeah, I think it's a question of like not if this is gonna happen, but when. Because like I feel like we've kind of seen enough to be like, okay, it's possible, and now it's just kind of like iterating and improving. Just like like Patrick was saying, when the LLMs first came out, they were pretty bad, but it was still impressive. And now look how much progress they've made. So if we see kind of that same progress curve, obviously it's harder in the physical world than the digital world on kind of like these like vision language action models and the progress on the AI or on the robotics hardware, then I think that'll eventually happen. But it's just more of a question of how long does it take. So you have some founders, obviously, like they're talking their own book, saying like, in the next few years, it's going to be in your home and it's going to be able to make you food and like put together a piece of IKEA furniture, which like that sounds like pretty aggressive. But in the next decade, like probably a lot of that stuff is going to be doable. Which is really exciting.
Right.
And then the more robots that get deployed into the world, the more data they collect. So like the better they get, right? So there's kind of that flywheel too.
So the power dynamics of these companies is once they've made 50,000 robots, it's much cheaper for them to make another 50,000 or 100,000 or 200,000, right? They start to get that. Whereas other companies, it's very hard to catch up to that, right? Both from a data perspective, like you said, and then also just like the manufacturing side of things. It's fucking hard to start manufacturing some new thing, right? Like Elon's the best in the world at this probably.
Yeah.
And it takes years and years and years. And that basically gets you a moat once you get that going. Okay, let me just zoom out real quick here. Let me recap the different layers. So we have at the bottom of the stack is basically your like data centers and energy, right? And then we put these GPUs inside of these massive buildings that are powered by all this energy. So that's your next layer, which is like hyperscalers, as well as chips and the semiconductors that all go in there. Then you have the labs. So basically the training that we use all that to make these like LLMs, your OpenAI, your Anthropic, et cetera. Then you have the actual use cases, the app layer. And there's sort of two versions of those. There's like your software app layer, which is like ChatGPT, I don't know, like Grammarly, like, I don't know, whatever. Think of ways you use Zora 2 or Sora 2, like however you use AI today. And then there's the other side of the app layer, which is like the physical side of the app layer, which is like your humanoid robots, your Tesla cars, and machines inside of factories, et cetera. So there's all that kind of stuff as well. Where do you think where does most of the value accrue in the short term or medium term? I don't know what time frame you guys want to think of here, but like, where do you guys think is the best place to put capital? Or do you just like spray across all those layers? Like, help me kind of think through what you think is the most like defensible of these layers, or we'll get the biggest of all these layers.
Yeah, like my favorite has been the AI robotics companies because I think it's like new, like people aren't really pricing it in.
Okay.
And like I think we're kind of like where we were when ChatGPT came out in the land of AI robotics.
Nice.
So there could be like a really big run there. And then also I think the long-term value capture makes sense because like they own the customer relationship, which I think is going to be super key. I think like owning the customer is where we've seen like a lot of value accrue. It's just like the switching costs are the other question, right? So it's like, you're pretty loyal to Grok. I would say, I use it sometimes, but I just like am more used to ChatGPT. So like I'm there, but much lower switching costs than, a consumer going from one chatbot to another versus, a company replacing 10,000 robots with 10,000 different robots. Right. And then also just kind of at the very bottom of the stack with these like data centers on these long-term leases. I think you can probably do really well on chips, but that's just like NVIDIA. That's just like dominated by NVIDIA, which is already like, multi-trillion-dollar company. So it kind of depends what your risk return goals are in my opinion. I think the hyperscalers could do really well. I just like haven't gotten to the level of like underwriting them to that point yet. I think the model companies are a little bit scary to invest in, and they're also private, so it's hard to get exposure there. And then the app layer is for me super scary because it's like, you have all these things with like then you come out with an app and then like the chat GPT like one
Rugs
shots
it.
you and just
Yeah.
adds a feature. So yeah, like I think if you're looking for just like broad-based AI exposure, I think like everyone knows it's just like these big companies, you could probably just buy tech stocks. And then if you're looking to go a bit deeper, it's like, investigate these data center plays, investigate the hyperscalers, maybe some of these AI robotics companies, maybe something even like for like, earlier on in the supply chain, like more energy based or like rare earths or something like that. I haven't spent a ton of time there, but kind of those are the areas that are kind of how I think about it. But primarily for me has been AI robotics companies and then the data center companies.
I'm pretty excited about like specialized inference. I think demand for inference is going to go insane. I think we're at the beginning of kind of that trend still, even though a lot of people use ChatGPT, like in enterprise, hasn't picked up that much. And as inference gets faster, it unlocks new workflows that you can do. So you get a bit of a flywheel going. The application and like model layer is definitely the most interesting side. You have like the frontier labs who are now continuing to build out frontier models, but also starting to become like bigger application players. Anthropic's launch of Claude Code was like generational, totally changed the game, did a lot of damage to like the cursors and the windsurfs. But on the like flip side, you have now Cursor launching their own models, Cognition launching their own frontier models. So the like major application companies are becoming labs, and the labs are also becoming more frontier application companies. So I think we'll see like a bit of a re-rating in both directions. Cursor just had this massive raise this morning at $30 billion post, which seems crazy for an application that is, on the surface super susceptible for disruption from the labs, but they're becoming a lab now. So it'll be interesting to see what happens there. These are much harder to invest in, obviously. They're all private, but the trends in demand and the trends in usage and capabilities ultimately drives everything. It's going to drive like whether CoreWeave is going to get wrecked on this leverage. It's going to drive like what demand for energy we need, what the build out looks like. Like Duncan mentioned before, there's a lot of early planning for build out happening. So like what's inference usage going to look like in 5 years? Like the physical world moves slowly. It takes a while to get power online, approvals and stuff. So we got to keep an eye on the application layer because it drives everything else.
So it's very clear that you're talking about there's trillions of dollars coming in CapEx for this, and we've got to build all these data centers and get all these GPUs and get all this energy, et cetera, et cetera. But then we've had like DeepSeek, and I think the Kimi K2 thing also plays a role in this. Is like, is there a world where we actually don't need all this, and maybe we just like find ways to really make this stuff more efficient, or maybe you don't need these massive data centers, and instead you can use something else. It reminds me of like the Silicon Valley show. I forget what the word is, but where they like made things super super efficient. What was the word that they used? Fuck, I remembered it this morning, but I can't remember it now. But compressing, like, is there a way that we don't need all of this build out and we can just like compress and the tech will improve that way, and maybe we're missing something? Or do you guys not buy into that?
Yeah, so I think like China specifically is under some GPU constraints. So people like to say that like scarcity breeds innovation. There's probably some element of truth to that here, but when numbers come out from DeepSeek and Moonshot, who built Kimi, saying like they trained this for $5 million, you're not really comparing apples to apples. That doesn't account for like talent cost, hiring people, doesn't count for R&D, previous training runs. It's just like that final run. It's also a lot cheaper to be the second and the third to reach a certain level of performance. If ChatGPT or Claude release a new frontier model and you're like distilling from that, it's so much cheaper. I think training wise, like we're going to continue to see like heavy CapEx to push the next generation of models. It gets like, exponentially more expensive to get new improvements in capabilities. But I do think that like I don't know if that's going to influence the demand for the build out that much, because inference is just going to explode. Even if Kimi is cheap to train, it's not that cheap to serve at scale. It's cheaper than some of the closed models, but as it gets cheaper, people talked about Jevons paradox before. Like I still think there's so much low hanging fruit in terms of application and inference to be brought online. So I'm not sure if
Yeah.
it's going to impact it that much.
And the whole Jevons paradox thing is basically like, uh, if it becomes cheaper, it gets used more. So like the demand actually doesn't like go down, right? So,
Right.
and I don't think we've really seen like the limits of how good these models can get. So like, if we get more efficient at training them, more compute can still help make them better, right? And then also like all this inference that Patrick's saying. So I think like, Elon fucking talks about that like we're gonna intelligence is just like a factor of energy, and we're gonna like cover the whole earth in solar panels or something, basically like try and harness as much energy from the sun as possible to like, or like, yeah, energy equals intelligence. So it's like, obviously, yeah, if it gets cheaper, then hopefully to train these things, then hopefully we can just make them better and like serve them more. So I think like that's like the kind of bull case for AI. I don't really fully understand, like, unless we start just to like not make any progress or have like fully saturated the demand for inference, which it feels like, especially with the AI robotic stuff, we're nowhere close to doing, then that's maybe where you can add that. But the demand like from all these people is like, power is like in the US is like the hottest commodity in the world because they're just so desperate to get more compute online.
There's also like industries, depending on the industry, are still super sensitive to increases in performance. If you're just like a casual ChatGPT user, you might not really reap the benefits of like GPT-5 versus GPT-4o if you're just asking it for like recipes. But if you're a software engineer, if you're a lawyer, if you're a doctor, a 1% increase in capability, like you will pay significantly more for that. It influences your job. It's significantly higher leverage. So as long as we still see some improvements and those fields don't reach like a saturation point, I think about it as like, when is an industry going to stop being sensitive to improvements in the models?
Right.
Because when we hit that point, then like the cost just drives down to zero and margins kind of evaporate. The game will change significantly. But for now, so many industries are like hypersensitive to this stuff, so it continues.
And then it's the whole like what new industries will like emerge. And I think about this with AI robotics. It's like, okay, like if you can, all of a sudden your cost of labor like drops immensely, what is now feasible? Right. That would just like, a lot of people are like, oh, can we open up this plant in the US and be like, there's no fucking way because it just doesn't make any economic sense. But all of a sudden, if the costs come down for these things, like what new industries or what new tasks like are feasible, like whatever, like something crazy like mining asteroids. Like, okay, now because we can just send these robots up into space, we don't have to worry about people dying. Can we like try and and do thing with that? Like obviously that's like a suit that might be 50 100 years out in the future, but that's just an example of like what now becomes possible from this like these new capabilities. Like because I think a lot of people and like get scared of AI because they think of as like a one-to-one replacement, like it's going to be replaced one-to-one. But like the optimistic view of this whole like AI revolution is that like it's just going to grow the economy and it's going to grow the pie so much bigger for everyone that even if like your job is like a smaller part of what it was before, the whole economic growth in the pie is just so much bigger that everyone's going to benefit. And I think that's like the optimistic way to look at this versus just looking at like, oh, this AI is going to one-to-one replace people's jobs. It's just going to grow everything.
Right. So let's start to wrap up with, you guys brought up this point that Michael Burry, who's famous for the Big Short, he's now shorting AI. I think is it specifically AI that he's shorting?
Yeah, well, so the whole thing that it got so basically when you do these 13F filings when you're trading options, it shows like the notional position size. So it showed that he like had like it was like short like $900 million of talent or something, but then he posted it was like a $9 million of like premiums, like capital at risk for this like massive notional position. So that was, I think that got blown out of proportion. But his whole thing was what we were talking about before is like this GPU depreciation. Essentially, like these customer or like these big tech firms are depreciating the GPUs at like a slower rate than they historically have, which essentially like boosts their earnings, right? So instead of saying like this GPU goes to zero over 4 years, we're saying like its useful life is now 6 years. So that like makes a pretty big impact to like the perceived profitability. Patrick can probably talk about this in more detail, but like I think there's still a lot of old chips being used, especially for
Yeah.
inference.
So the concern, just so I understand, and then Patrick, you can riff on this, but it used to take 4 years or whatever. Maybe that was a made up number. Now it takes 6. Is that because like they just made better GPUs, or we're not using them as much, or they're just like letting these things run even though they're degraded too much at this point, or like why are they able to go longer with them?
Yeah. So, I mean, right now, the reason is that there's just so much demand. So, if
Yeah.
you're OpenAI and they have something like 700 million weekly active users trying to use ChatGPT, you just need GPUs to serve these people with.
Right.
So,
Okay.
they're still using, A100s that came out in 2020 and 2021. Those are like 5 years old. That's out of the previous depreciation schedule, and they're still in high demand. There are lots of companies still running fleets of A100s. The question is really like, these are estimates, right? They're like accounting estimates. What Burry is saying, like, it's fraud if this is happening, and they're like willfully extending the depreciation schedules of these assets. I think right now, like, there's just so much demand that you need any chip you can get your hands on. The VP of Google Cloud last week on a call said that their TPUs that are 7 and 8 years old are at 100% usage rates. So, like, 8-year-old chips still being run nonstop. There's just so much demand. Now there's a ton of capacity coming online in the next year. We've had this build out going on. So it'll be interesting to see like what happens. Do they start to decommission these older chips? My feel is that like probably not. There's just so much demand for inference. Even like the older models still need to be served. Enterprises move slowly. They upgrade to like the newer models after like 6 months, not immediately. So like I wouldn't be surprised if in a couple of years there's still like a bunch of A100s being used in data centers. In which case these depreciation schedules would be spot on.
In the early,
I think that like that's one that we'll just kind of have to tell. I think nobody really knows, right? And
yeah,
obviously for the companies, if they can extend it, it makes their profitability on paper look much higher.
Yeah.
But it's like the top of the line chips are being used for like the like new training of new models, and then these kind of older chips are being used for inference. So I don't think anyone can really answer that question. Because we just don't know what demand will look like, and how many new chips will be available, how much power will be online. There's a lot of factors that go into that.
it feels like the entire way down the stack of AI, inventory is sold out. Whether you're looking for GPUs, you're looking for data centers, you're looking for energy, like it's tapped out everywhere. And if from what I gather, you guys are saying that's not stopping anytime soon, which thus probably means we are not in a bubble. Would you guys agree with that?
Well, yeah, and that's like probably the best person to answer this. Obviously, he's talking about his own book is Jensen, and he got asked this like a few weeks ago on the Brad Gershner like BG2 pod, and he's like, yeah, like just to kind of switch from like what we already have, like the old way of computing, to like the new way of computing, which is now like GPU and AI based, is like 2 to 3 years minimum. So he's like, I don't see any kind of like over build outs or any gluts in the market for the next 2 to 3 years, because every single company is kind of like moving that way because they need to upgrade to stay competitive. And then like beyond those 2 to 3 years is where you could get into like, okay, is the demand still there? And I think like, there's these massive sectors like robotics that could take off, just like deeper integration of these tools into everyday life, or corporations that could, provide tons more demand. But yeah, I think in the next like couple years, it's pretty hard to kind of see a bubble there. Like there's obviously we could get overheated and like have a pullback, but like a structural bubble, I think is unlikely. And then also you have to keep in mind that like this administration is like very set on wanting to kind of stay ahead on AI. And like if you have government support of like, okay, we're going to speed up power approvals, we're going to support these companies and however we need to, and keep the economy going, because we think it's like a matter of national security that we don't lose, quote unquote, lose the AI race to China or something, or stay at the pack. Like I think that's like a massive tailwind that you can't discount. Like that could have side effects of like leading to inflation and these other things, but like they're making it like a matter of national security that like if all of a sudden we just completely halt our build out, there's a fucking blow up like the .com bubble, and then China, who's like centrally planned, just steams ahead and eclipses the US, like that would be an absolute disaster, right? So
Right.
I think you have a lot of like pretty strong tailwinds to point that this isn't a bubble. And obviously like AI stocks in the past couple of weeks have sold off, but they've just gotten like extremely hot. And I think the market is still digesting all these questions. It's like, okay, like what is the proper way to depreciate these GPUs? Like where's this demand going to come from? How long is it going to take to get this power online? Like it's all these things that the market is just digesting, and it's like a massive machine that's processing information. But I think it's pretty hard to see like a bubble pop or like a proper bear market within this in the next couple of years.
Yeah, I mean, I get it. It's scary when you have guys like Sam Altman going on podcasts and on TV saying we need like $10 trillion in the next 3 years to do these build outs. And you as an investor are kind of sitting there and going like, okay, this seems a little too hot. But everything we've talked about today, whether it's agents in like the digital world or robots in the physical world, we're talking about like on the demand side, how are you going to put a ceiling on like human intelligence and the demand for like physical labor? If this pans out with robots and agents keep getting better and more domains come into scope, like I feel like the show can go on for quite a while, and like the demand is going to be insane. It scales for a long time. So, the next couple of years are going to be super interesting. People have been saying that we're about to hit a wall with AI for the last 2 years. Like people said GPT-4 was the wall, and they kept getting better. We're now getting into like Sora and digital worlds and generating video games on the fly and pictures and movies. Disney has just said that they're partnering with like an unknown AI lab to like let people create their own Disney movies on their apps. Like that's insane demand that scales and scales and scales. So it'll be a crazy ride.
Absolutely. I just test drove a Tesla last week for the first time and had fully self-driving. It's still supervised. But that to me was one of those moments where like the first time I ever used an iPhone, I was like, holy shit, like the world is changing. I had that moment when this car was driving me all around the city and I was like, what is happening right now? This is nuts. So I can see this world.
One of the robots.
Yeah, right. Yeah, exactly.
When you see the robots in person, it's like, fuck, this is
It's interesting because like when the internet was going through its adoption, you couldn't think of what the things were that the internet was going to create. Like what was the next demand when we got the fiber laid? Like no one thought Uber was coming, right? I don't think many people predicted that. But like you can already see what's happening with AI, right? It's the physical world. It's self-driving cars. You know how much like power and processing power and compute and all that's going to be needed to. There's so much data there. And then when you get humanoid robots, it's literally infinite. And so we already know those are coming. Like they're already close to being here. You don't even have to try to like think of what's the next big thing. You already see it. And then obviously you're talking about going to Mars or the moon or whatever. And
yeah, then the things that we don't see. Like even just the stuff that we can see that's in sight feels massive. And then, you obviously I don't know about the moon or Mars, but like stuff like that where it's like it feels like it's not feasible or we can't see it yet, but in like 5 or 10 years it might become realistic.
Well, gents, that was an incredible conversation. I appreciate you guys for helping us lay out the grounds of, where can we invest and what's possible inside of AI, and then just like painting the picture for why AI is obviously so bullish moving forward and why we're more than likely not in a bubble. So we will continue to have this conversation on a weekly basis, continue to help navigate the world of AI. And are we in a bubble? Are we not? What are the next big things coming? And where can we be putting our capital? That's going to be the entire purpose of this show. So thanks everyone for listening in. Duncan, Patrick, thanks for joining. Those that are listening, if you're still here, please give us feedback, comment, let us know what you thought. What did you not like? What did you like? Give us some feedback there. And then otherwise, make sure you're subscribed. Make sure you share it and give us a like as well. That'll help us grow and get the word out to a lot more people. So everyone, thanks again for showing up, and we'll see you guys next week.
See ya, bye.
Want to stay ahead of the biggest technological shift in history? Subscribe now to get insights straight from the sharpest minds in tech and finance. Quick legal note, this show is for educational purposes only. Nothing here is financial advice. Investing always carries risk. Never invest more than you can afford to lose. Thanks for tuning in. See you in the next one.